What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 44. It's December the 12th, 2023. We made some trades today, so let's get into it. First thing we need to talk about, let's talk about yesterday's closing price. Now, that price level was this purple line right here towards the bottom of the chart at 36,800 flat. So let's go ahead and talk about trade number one. But before we talk about that, let's of course talk about the CPI release that came out today. That's what came out at 8:30 that caused this large spike in volume. And then we saw the candle really go both ways. It initially pushed down to the downside, came back to retest these higher low support levels right here, and then pushed all the way up to the upside, all the way up to around 36,992, I want to say, if I'm not mistaken. And then it came back to close all the way at 36,940, pushed back up, had a lower high, and then we continued the down move for a pretty good amount of time. And that's when we formed higher low A right here. So we had our long tail wick, pushed up, came back, retested this higher low support level, and then continued higher. So as prices were coming back to test that level from A one more time, that's where I went long at trade one. Now the notes say I went long here based on a retest of higher low A, but I should remember to not buy the higher low in front of strong selling. Now this is not a new lesson for me. This is something that I already knew when I was taking the trade, and I think the first level of progression that I reached was being able to just understand what doesn't work for me in the market. But I think the next level of progression that I need to reach is me being able to take that information and just completely avoid those trades at all costs, because I kind of try and compromise and say, okay, I know that I shouldn't go long in front of the strong selling, but I believe in the higher low so much that I'll go long here anyway. And if it doesn't work immediately, I'll just get out of the trade. So that's pretty much what I did at trade one, and just took a small loss. But I think in scenarios like this, what I need to do is just not get in at all, because even though this was a small loss, if it's not a necessary small loss, then it really doesn't matter. It will be different if this higher low occurred in a very strong uptrend and I was like, okay, I'm not sure about it, but because the trend is up, I want to take the higher low because the trend is on my side. In this scenario, everything really pointed towards me not taking the trade. So for little small losses like these, I got to find a way to avoid those, because they add up at the end of the day and at the end of the week. So it's important for me to avoid those trades, and that's the next thing that I need to focus on getting better at. So then we come back to trade number two. Now at trade two, I shorted here at a prior resistance level, and I expected more selling back down to yesterday's closing price. Now after that, I say always stick to the plan. The reason I say that is because this short at trade number two really wasn't a trade that I usually take. It's not a trade that's in my trading plan. It's just a trade that felt right at the time because we were in a downtrend making lower lows and lower highs. Prices really came back to retest this level of the prior lower high that got formed. They tested the opening price for that candle, and that's where I shorted from. And yeah, the trade was working for a little bit until it came back to break even. But even though it wasn't a loss and I didn't lose anything, I still feel like trades like that, I just got to avoid those. So, I started off the day a little bit rough, trades 1 and 2. And I think this kind of set a precedent for the day, because now I kind of felt like I dug myself into a little bit of a hole. So I felt like I had to get that back a little bit. And that didn't affect me too bad in part one. But as we get into part two and part three, that mentality kind of began to catch up with me, and we'll talk about that. So let's go ahead and talk about trade three. So at trade three, I went long here as prices retested the higher low from higher low C, and then there was a double top right before this. So that's pretty much the exact reason why I took a loss on trade number three, because yes, I was buying the higher low because we had higher low B, higher low C. So we had a series of 3 higher lows between B, B1, and then C. So I'm saying, okay, more than likely prices are trying to move back up to the upside to maybe come back all the way up to retest where they closed at when the CPI candle closed at 8:30. That was my idea, but the fact that it was a double top up here pretty much invalidated the long trade at that point. And that's one very important thing that you got to remember when it comes to the higher low. You want to make sure that if you do go long at the support level from that higher low, that one, you're in an uptrend, and that two, there are no bearish signals within the immediate vicinity that can give conflicting signals. Now in this scenario at 3, the bearish signal that was giving conflicting signals was the double top. So in a situation like this, it would just be better for me to avoid trade 3, so I won't have to take a loss like I did right here. So then we come back and the market opens at 9:30. We flashed all the way back up to retest that prior double top that we made, and once we hit that level, we immediately saw rejection. Prices broke past a higher low right here. We can call this higher low C1, and once they broke past that level, they proceeded to break past higher low B, and then once they came back to retest that, that's where I went short. So at trade 4, I shorted after prices broke past the prior higher low support level of higher low B, and then I just took this back down to yesterday's closing price. So trade number 4 pretty much was able to make up for all of the losses that I took through trades 1 through 3, and I was actually net positive at this point in time. And that was very important because I had a decision. I was like, I caught one of my best setups at trade 4. I'm in profit. The profit that I'm looking at, it's not exactly what I wanted to get today, but it's still fairly decent. So I had a choice to be able to just call it a day right there and stop trading, but I decided to keep going. So let's go ahead and talk about the rest of the trades that I made today. So this right here is part 2 from December 12th, and this is the AM, this is the morning session. So let's go ahead and talk about trades 5 through 6. So right here, 5 and 6 came at this juncture. Now at 5, I went long here as prices came back to retest higher low E, which is a good strategy. But what I learned is that it's better to buy from the lowest higher low. And that's very important if you have two higher lows that are within close proximity of each other. So notice how E and D are not that far away. They're about 15 points apart. So in a market like this, 15 points is really nothing on the Dow Jones. So you got to make sure that if you do want to go long, just go long from that lowermost higher low, and then you have a better chance of being successful. Now, one of the rules that I have in my trading plan to combat that and to be able to make back that money that I lost if I did go long too high is to go long as prices spike back through my entry price if everything still lines up and the uptrend is still intact. So that's what I did right here on trade 6, and I was able to make those losses back plus a little bit more. But all in all, I feel like these two trades could have been a lot more profitable if I was able to avoid trade 5. So that's the biggest lesson I learned right there. Just remember that if it's a higher low that's within the immediate proximity, go long at the lowest one and skip the entry at the highest one. And the highest one right here was higher low E. We should have went long at higher low D. So that's the lesson I learned right here from trades 5 and 6. So then we move along to higher low F. Now higher low F was very interesting because this pretty much acted as a level of support for the next maybe 30 minutes, and we came back and retested this level not once, not twice, but 3 different times. So that tells you that this support level is very strong. Now on trade 7, I went long here as prices came back to retest higher low F, and then my break even got hit. And sometimes in the market, you might have a great entry, a great trade that goes in line with the trend, and you got in at the lowermost levels of support, but sometimes it'll still come back to break even, and then you'll see the market go the exact way that you thought it was going to go, and you'll have to just miss out on that trade. Now, the right thing to do in a scenario like that is to just accept it. Don't chase the market, don't revenge trade, and don't try and force a trade that's not there because you weren't able to participate in the trade that came before. And that's important to talk about because on trade 8, I actually did exactly what you shouldn't do, which is I took a revenge trade right here because I was irritated that trade 7 moved without me, and I just should have bought lower. Like, okay, if I'm taking a revenge trade, maybe I should change that into a positive revenge trade, because you could take a revenge trade that's just completely wrong, or you could take a revenge trade that's completely right. And then if the trade is completely right, it technically isn't a revenge trade. It's actually a good trade. So in this situation, I shouldn't have bought at this prior higher low right here. I should have bought at higher low F because that was the major level of support up until that time. But this is why it's so important to not let your emotions get a hold of you, because if I was thinking with a rational, clear mind at the time, I would have just simply said, oh, I went long at trade 7 and the prices moved in my favor. Well, if they're pulling back and they're coming back to that level from trade 7, I should go long right there at the same price, right? So that's what I should have been thinking in that moment. But hey, those emotions can get a real hold of you, and that's why it's so important to stay mentally focused and stay centered. Don't get too high, don't get too low. Just kind of stay in the middle and don't take any trade personally. At the end of the day, this is a job. Don't take it to heart if the market doesn't do exactly what you wanted it to do. Just instead look for the next best opportunity, and when that comes around, you execute, and then you make a good trade and you keep moving. So that's the biggest lesson I learned right there on trade 8. So then we move up to trades 9 and trades 10. So I went long here as prices came back to test higher low I. So higher low I is right here. But also notice what's right below higher low I, we have higher low H. So this pretty much ties back into the same theme that we've been talking about for the past few trades, which is you got to make sure that if you want to go long and it's two higher lows within a close proximity of one another, you got to go long at that lowermost higher low, because that's where you have the best probabilities of the uptrend actually working and going in your favor without hitting your stop loss. So on trade 9, I went long, took a loss. But on trade 10, as prices spiked back through my entry, I took that same trade again. Now, this right here was interesting on trade 10 because I did have an opportunity to lock in about 15 to 17 points worth of profit, but because I was already in drawdown for today, I just wasn't thinking clearly. And that's something else I want to talk about after this trade, but I just wasn't thinking clearly, and I just ignored all of the signs that were in the market. You know, when it got up to this high right here, I really had no reason to sell, not just yet. But then once we made this lower high on this next candle, that was every indication I needed to sell. But instead of actually taking profits right there, I just watched profits come all the way back to break even. And I think that is so important to make sure that when you're in the market, you make the right trades, because you never know how the decisions that you make now will affect you going forward into the future. And it seems like when I'm in drawdown, I kind of start just getting a little bit emotionally charged because I want to make that money back and I want to make it back now. But what I've learned is that the harder you try to make money in the market, the more likely you are to probably take a loss, because you're more than likely going to try to force something that's not there instead of just being patient and letting the market come to you. So I think whenever I do have a day where I'm down, I can't just panic. I have to just sit back and say, okay, I made trades that didn't go my way. Let me look at those trades, figure out what went wrong, and then correct those mistakes on the fly so that I don't keep making the same mistake over and over again throughout that session and continue to build a deeper hole for myself. So that's something that I'm really kind of picking up on, and that's very easy to say, but it's very hard to do. But it's something that I can do because I've done it before. It just requires a very, very, very keen level of focus. You got to be 100% locked in order to bounce back when you are in drawdown, and I think that's very important. So that was trades 9 and 10, and that was the lesson I learned right there. So that brings us to trade 11, and this right here was just another mistake that I've been making all day, which is buying at the higher low that's the highest higher low instead of buying at the higher low that comes a little bit lower. So I bought right here based on the retest of higher low H1, right? I should have been going long though at G1 down here, and that's very important. So let's read the notes. This was my most common mistake today, trade 11. I have to buy the lowest higher low in these scenarios, and that's so important because all of these losses that I took on 11, on 9, on 8, and on 5, I could have avoided all of those losses by just going long at the lowest most price, and all of my issues would have been solved today. So it was one simple mistake that just kept plaguing me all session long, but you know, I learned from that, and I think that's what's really important. So now it's up to me to not make that mistake again going forward into the future, and I think I'm more than capable of not being able to do that. So let's go ahead and move on to trade 12. So at 11, I was a little bit too early on the long trade, but once I saw this higher low push prices back up above H1 and then come back to retest it, that's where I went long at 12. But the thing about 12, this was a great entry and it was a great trade for me. The only thing was I closed my trade way too early, and I closed my trade early because I was just a little bit scared. This was another thing that I can contribute to just being in drawdown and being emotionally charged more than I should be, because I think on a normal day I would have had no problem holding this trade because it was no signs in the market that indicated to me that this trade should be closed out for any reasons. There was no lower highs, there was no immediate bearish signals anywhere in the vicinity, so I should have just kept holding on to this trade. But the reason I got out was because I was already in drawdown and I was scared that prices would come back to my break even, and then all of this hard work that I did to get this trade would be completely erased. But when you're in the market and you already have a good trade going, you can't be scared to let that trade run. You got to let that bad boy rock out and just see where it's going to go, and don't get out of it until you see a negative signal in the market. That negative signal came literally 2 candles later and about 10 to 15 points higher, where I should have been taking profits at the top of structure up here. So it just goes back to making sure that you stay emotionally centered and emotionally balanced, even if you are in drawdown that day, because what you did on the previous 11 trades, 100% is irrelevant. The only thing that matters is the trade that you're in right now and the next trade that you plan on taking. So you got to manage whatever trade you're in and make the best out of it. And don't worry about what happened before. Don't worry about what's going to happen after. Just focus on the moment and maximizing the opportunity that's in front of you right here, right now. So that's the biggest thing I took away from trade 12. Just let your best trades run. It's all good. But then I came back on 13 and I made another revenge trade because I was frustrated that I didn't hold trade 12 to completion. So I got emotional and then I revenge traded and went long again right here. Now, my line of thinking pretty much was, okay, I think I made 12 points on trade number 12. So I went long right here at the same price I got out from at trade number 12 and said, look, I'm risking 10 points because that'll pretty much bring me back to break even and take away all of the gains that I made from trade 12, but not put me in a deeper hole than I was before I took trade 12. So that was my line of thinking, which is kind of rational if it was a good place to go long, but this really wasn't the spot to go long. It was nothing right here that told me that I should be entering. And usually whenever I do have a good trade, one of my biggest rules is to not double dip. So trade 12, even though it wasn't the biggest profit that I wanted, it was still a profitable trade. So for me to come back 1, 2, 3 candles later and double dip on that trade and try and catch it again, that's just going against my rules. And because of that, I had to take that loss. Now, what's even more interesting and also a little bit frustrating is the fact that if you look at where I got stopped out at, I got stopped out right here at the orange triangle, which also just coincidentally happened to be the low of that entire swing. And once I got stopped out, that's when prices reversed and kept moving on to the upside, where I could have participated and made good money, but I was scared because I know my rule is to get back into a trade that got stopped out, but as soon as prices spike back through that price and everything remains the same, the uptrend is still strong, I got to get back in. But because I was scared, I didn't do it. And because of that, I missed out on this move right here. That was very frustrating. So you add that frustration onto the frustration that I already had before, and things just start getting out of control a little bit. But the key word here is a little bit. And I think the biggest thing I can say today that I'm proud of is the fact that even though I was a little bit irritated and frustrated, somehow, some way, I still was able to bounce back and make some good trades, and we'll talk about that in part 3. So let's go ahead and move on to that part. All right. So let's go ahead and talk about trade 14. Now, let's zoom in. I know it's a lot. It's kind of jumbled up a little bit, but I'll explain everything, okay? So, trade 14. I went long here, right here, based on higher low J's retest, and then I exited once I saw a lower high. So I can't be mad at that. That right there was a decent trade. You know, we had a big move to the upside, higher low got formed, no immediate bearish signals in the vicinity, so I went long as we came back to retest higher low J. But once I saw this lower high and then I saw prices break back down below that support level, I got out, saved myself from taking a full stop loss. So I'm not mad at that. I think I managed that trade very well. Now, 14A, it was the same entry as 14, but it wasn't managed as well as I did on trade 14. So let's talk about that. So for 14A, I went long right here at higher low J. Now prices went against me a little bit, but not enough to hit my stop. And then they eventually came back into profitable territory and gave me a decent little profit. You know, it wasn't the regular scalp target that I'm looking for, but it was good enough for me to take it because I saw that this overall wick had wicked out up here towards the same closing price from this candle that also wicked out, which pretty much is telling me that more than likely that's where prices want to come up to before they pull back a little bit. But because I was just thinking about the losses that I took before on the other trades, I just throughout the session, really throughout the entire day, it was a lot of occasions where I was just unwilling to take smaller profits because I'm trying to make back all of the losses that I made on one trade. And I don't think that's the methodology that you want to have when you're actually trading and you're in a real session, because you don't know what the future holds. So why not just take the profit that's there in front of you and then just see what that profit taking is going to do for your mental psychology? And I think that's really the most important thing for me, because when it comes down to it, it's not even about winning or losing or any of that. It's just about me staying mentally focused and mentally centered. And one thing about profit taking, whether it's a full profit target that I hit or a half a profit target that I hit, it doesn't matter. It's something about locking in those profits that changes the way I think. It makes me a lot more relaxed. If I was stressed out before, all the stress is gone. If I was irritated or frustrated before, all of that is gone. And now I can think from a place of clarity and make the right and proper decisions when it comes to the next trade that I want to make and I want to take. So I think it's so important for me to lock in those profits when I have them, because it really does something for me mentally. And I think that makes a big difference for me. So on 14, I had a chance to take profits, but I didn't. And then I also had a chance to actually get out of this trade at break even once I saw that it was coming back. But I ignored the lower high that got formed right here, and I just watched prices come all the way back and hit my stop loss, and I was like, dang. But sometimes it's like that, and you got to learn from your mistakes. And I think I definitely learned a very valuable lesson right here on 14 and 14A. So then we move on to 15. Now 15 was interesting because if we follow prices all the way back up to this swing high, notice how we had a lower high that got formed right here. We pushed down, broke past the level of support, made a second lower high, and then pushed back down to the higher low support level from higher low K right here. And that's where I went long at 15. And the only reason I went long is because I felt like the trend was so strong that more than likely prices were coming back to retest the major most support level, which I thought was higher low support level K. So that's the only reason I went long right here. And that's just not enough. You got to make sure that you have at least two valid reasons for going long, or not even going long, for entering any position. You got to have at least two reasons. And right here, I just went against the overall market trend because we had a long tail candle wick followed by a lower high that broke past support, followed by a second lower high that broke past another level of support. And then I went long just because prices hit the next level of support below. And that's just not what you want to do, because in that scenario, I'm fighting against the trend, and me taking a long trade in a short trend really just puts the probabilities against me. And when it comes to trading is just a numbers game. You want to make sure the probabilities are on your side as often as possible so that you have the best chance of being successful. And if you don't have the probabilities on your side, you can end up having to take a loss like I did on trade 15. So it's so important to make sure that you, one, trade with the trend, and that you, two, have multiple confirmations to indicate that you do need to get into that specific trade at that time. So that's really the biggest lesson I learned at 15. Just make sure you trade with the trend and look for multiple confirmation signs before you get in. All right, so that was trade 16. So I just kind of waited, let prices do what they did, and I just kind of said, all right, let me look for a good higher low so I can take a really good trade and get myself back on track. So then we finally saw higher low L get formed right here, which is very interesting. So let's talk about this. Now, at 16, look at what we saw right here. All right, so we had lower high number 1, lower high number 2, lower high number 3, lower high number 4. So then once they broke past that higher low at L, I said, whoa, we had 4 lower highs that led to a break of a higher low support level. That's definitely a higher low failure setup. That's something I was talking about yesterday on the video. So I was like, oh, okay, perfect. I see exactly what's going on. It's time for me to short. That would be a great idea. And like the notes say, this will be a great short in a downtrend. But the higher low failure isn't as effective on a strong uptrend day. And that's one of the biggest lessons that I kind of already knew, but because I just kind of got wide-eyed, I kind of forgot about that lesson. And I had to learn that lesson the hard way again, which is, even though price action might look good for whatever setup you want to take, you also have to make sure that the market context aligns with the same kind of setup that you're trying to take. So if you're trying to take a short setup, you got to make sure that you're in an overall downtrend. Now, this right here was a down swing, but the overall trend was still up at this point. So you got to remember that as you come to the lows of a pullback in a strong uptrend, yes, it looks like the short trade would be a good short right there. But more than likely, that's also where all the buyers are coming in, because they're saying, ooh, prices are back to a lower price now. We can get a better price on the trades that we took from before. So let's go long right here. And you have a large wave of buying that comes in, usually towards the lows of a very strong pullback during a strong uptrend. And that's pretty much exactly what I shorted into at trade 16. I shorted right here, and this goes back to trade management also a little bit, because I was in profit for a good amount of time and I had a chance to take profits down here, or at least take profits at break even when they came back to my entry. But I decided to do none of those, and I just kind of let it go against me a little bit. But before it could go against me for a full stop, I did get out. But I feel like this was a loss that I didn't have to take because I had opportunities to make better decisions. But you know, I took the trades that I trade, so I took the, like, I'm all over the place. I took the trades that I took, so I have to live with the decisions that I made. But what's important is that I learn from my mistakes. And one thing about it is that if you see a long tail candle wick and you're short, you just got to get out. It's been so many times over these past couple of months that I tried to short against the long tail candle wick, and I don't think I can recall one situation at all where it actually worked out for me. So I think it's important for me to just start to eliminate this type of trade from my trading plan 100%, because it just doesn't work for me, you know. But trades 16 and 17 are interesting to me because these represent a very similar trade that I took on November 29th. So let's take a mental snapshot of what we see right here at 16 and 17. Notice how we have a inverse head and shoulders, right? This is the head, this is the left shoulder, this is the right shoulder. So let's go back and look at November 29th real quick. All right, so look at November 29th right here, and look at trade 28, 29, 30, and 31. This was pretty much an exact carbon copy of what we saw today, where we had a very pronounced inverse head and shoulders where the head is clearly defined, the left shoulder is clearly defined, and the right shoulder is clearly defined. Now on this day, I was also in my feelings and very emotional and very frustrated because I was taking losses all day. And when it came to 30 and 31, this was a perfect higher low setup, but I shorted it right here and I took losses on those, and it really frustrated me because when I look back on that day, I was like, man, I knew I shouldn't have took that trade. So when I came to that exact same scenario today, I was like, look, man, you know what? I've seen this before. So let me make the right decision and go long right here. And that's exactly what I did at 17 as prices came back to retest the support level from higher low L. And then I just took that trade back up to the top of structure right here, right past this previous lower high that got established. So that was a good trade right there. And this is where I kind of started to turn things around and kind of get into my groove a little bit, because up until this point, until trade 17, I wasn't quite at my daily loss limit of negative 40 points, but I was coming pretty close. I think I was about 30 points down. So I had like 10 more points to go of losses before I had to call it a day. But 17 kind of took a lot of those losses away. And then I kind of started to get into a better frame of mind and start thinking a little bit more clearly. But I still took a loss on 18 on the next trade that I took. And let's talk about why that happened. So right here, this trade on trade 18 pretty much was along the lines of the same methods that I use on trade 16. I saw a really good short, at least what I thought was a really good short, but I still ignored the fact that the overall market was not in a downtrend. It was in a downswing, but the overall trend at that time was still up. So I need to skip all short entries when it comes to a strong uptrend, because you really only want to play the market for the trend direction that is going at that time, because that increases the chances of you being successful. And that's what I'm looking for. So at trade 18, I went short right here, took a loss on it, and I learned my lesson though, you know. And if we read the notes, let's just lock that in real quick. It says short entries have a lower probability of success on strong up days, and that's something that I got to remember. So let's move on to 18A. So 18A came right here, and 18A was pretty much just a higher low trade. I saw higher low M get formed right here. Looking at the fact that we already had an inverse head and shoulders, we came back to retest it, and then we had a long tail candle wick that moved off of it. Then we formed higher low M. I looked at that as a very strong higher low level. So as soon as prices came back to retest that level of support from the higher low at M, that's where I went long at 18A and took prices back up to the top of structure right here, where this this triplet of wicks are located at. All right, so that was a good trade right there. And then we see the uptrend start to continue. We start to see a lot of volume start to come in, and a lot of bigger candles start to form. So that's telling us that the uptrend is starting to pick up a little bit of momentum and a little bit of steam. So then we come back, we form higher low N, we push away, come back, retest that support level from higher low N. So I go long once again, and then take prices back up to the top of structure. So then that was trade 19, and that right there brings us to trade number 20. So at 20, the same mistakes that I was making in part 2, they started to catch up with me a little bit once again right here, because I went long here at 20 based on the support level of the higher low from higher low P. I was expecting higher low P to hold up, but what I should have done was go long at higher low O, and that's so important because this was the biggest problem all day. And it's like, okay, if this hasn't been working for me before, I should have been able to adapt and switch gears and say, okay, let me go long from lower prices. But I learned my lesson, and I know that tomorrow I definitely, more than likely, will probably not make these same mistakes. But I just wish I could have adapted a little bit quicker when the session was actually going on and not realize all of these mistakes after the session was over. But what's done is done, and the lesson has been learned. So that was pretty much the biggest lesson on trade 20. Just remember to go long at the lowermost higher low level and not the highest one. Very important to remember. So then I come back on trades 20 and 21, and I went long here again at P after I had a little bit more confirmation. So we had the false breakout past P, and then we came back up, reclaimed that level, and made a higher low. So I went long right here, expecting for the uptrend to continue. Now on this trade right here, I had a little bit of profit. It was pretty good. It just didn't hit my original profit target. So I was like, you know what? The trend is strong. The move is up. So if prices do retrace back to my original entry, I want to add to my position. And that's exactly what I did right here at trade 22. I added as prices came back to retest higher low support level P. All right. So then I had an opportunity to take prices up to the closing candle of this tweezer top right here. But I was like, I could take profit, but nah, because I see how strong the uptrend is, and I believe that we can see continuation to the upside, which did happen. But all of that happened after the market closed at 4 o'clock. It's not in the screenshot. This is 4 o'clock right here, but from 4 o'clock to 4:20, prices ran all the way back up to 36,990 where these highs were. So I was right about the direction, but at the time I was just way too early, and I was trying to force a move that wasn't there, and I didn't lock in profits that were available for me to have. So that just goes back to what I was talking about earlier. When you're in drawdown for that day, you want to make sure that you lock in whatever profits you can, because you never know how that's going to change your mental psyche. You might be able to make a whole lot better decisions when you have more trades in the future if you lock in profits now. So that's why it's so important to make the good decisions right here, right now, because you never know what the future has around the corner, and that's very important. So at trade 21 and 22, had a chance to actually get profit, but it all came back to break even. And I was like, man, I could have made some money on that one, but it's all good. I learned my lesson. So then we come back to the last two trades of the day, trades 23 and trades 24. Now right here, we had a little bit of a zone that got formed. So I said, okay, we're in an overall uptrend. We made a zone. So therefore I should only trade the zone from the long side. So that's what I was looking for right here. So as prices came back to retest the bottom of the zone at 23, I went long, expecting to take prices back up to the top. And as prices started to move in my direction and I saw momentum and volume start to come in, that's when I added to my position at trade 24. And I think I added 4 contracts right here. So I had one right here at 23 and then added 4 right here at 24 and took those 5 contracts back up to what used to be the support level from higher low O, which is now acting as resistance at the top of the zone. And then that was my last trade of the day, and the market closed a few minutes later. So all in all, today it started off rough, and yeah, I finished the day in losses, but I pretty much made back about 80% of the losses that I took from earlier in the session. So I'm proud about that, but I'm still disappointed in the fact that I even dug a hole that deep at first, because I had chances early in the morning on part 1 after trade number 4 to finish with like a 10 to 15 point profit for the day, which is not exactly what I was aiming for, but it was good enough at the time, you know. And then I kind of just made some bad decisions in part 2, and that kind of messed me up a little bit. And then I finally made all of that back in, well, not all of it, but most of it back in part 3. But still, it's like, I don't want to be that inconsistent. I don't want to be up and down, up and down, up and down. I want to make good decisions on a consistent basis throughout the entire session for however long I decide to trade. Some days I trade 2 hours. Some days I trade the whole 6.5 hours. So however much time I decide to spend in the market, I want to make sure that I'm consistent throughout the entire session, because a few bad losses in a row can really throw you off. Not only just from a point of like a profit and loss statement, but from a mental perspective, because that's really the most important thing when it comes to trading. It's not you and your account balance. It's you versus you versus the chart. You have to make sure that you make the best decisions and you don't sabotage your own success. Because if I came out here and made the decisions that I knew I was supposed to, this would have been a great day. Now, it wasn't a bad day. It was a losing day, but I kept my losses in control. So I'm proud about that. You know, I'm still profitable overall for the week, but still it's like, man, I see the potential that's there, and it's really up to me to make the right decisions. So I think all of that really just comes back to discipline, patience, and focus. Those are the three key pillars that will lead me to success. And if I master all three of those, the sky is the limit. So the biggest things that I took away from today's session was, one, make sure if you want to go long at the higher low and it's two higher lows within close proximity of each other, make sure that you go long towards the lowest level of that higher low support. So in a situation like P and O, don't go long at P, go long at higher low O, and then add to your position once they break back above higher low P. See, that's how you want to do it. And I think today I just got a little bit too excited because I saw how strong the uptrend was, and I was just like, ooh, I got to get in, I got to participate. And that's true, you do have to get in to participate when the trend is strong, but you still got to get in from those best levels that you can find, which in my scenario comes back to the lowermost higher low. So that's one thing I learned. And also, don't double dip on the trades that you already had profits on. Don't revenge trade when the market doesn't go your way. You know, you just got to accept that and say, hey, I'm waiting for my next best opportunity. I didn't do what I wanted to on this one, but guess what? The market is still open. Prices are still moving. So that means it's going to be opportunity for me in the future. And all I got to do is capitalize on that. So that's really some of the biggest takeaways I took away from this session. And also, the last takeaway was, when you have profits and you're in drawdown, don't try and make all of those profits back in one trade. If you have good profits on the trade, lock that in, because you never know how much that's going to do for your mental psychology and how calm that can make you, how peaceful that can make you, and how just locking in a simple trade can take away all the stress, all the frustration, and give you that mental clarity that you need to go forward and make the right decisions. So those are the lessons that I learned today. It was a losing day, but I kept my losses under control. I stayed underneath my daily loss limits. So all in all, at the end of everything, I have to say I'm happy with what I did, but it's a lot of room for improvement. So that's what I need to work on going forward into tonight's study session. But I'll be back tomorrow. Tomorrow's going to be a big day. Fed announcement coming out at 2 o'clock. Press conference coming out at 2:30. So it's going to be a lot of volatility, a lot of opportunity. And it's up to me to capitalize on that opportunity that's going to be present. And I think I'm more than capable to be able to do that. So I'm ready to get back to it tomorrow on December 13th. So I'll see you guys then. But until that time, you guys have a good time. Man. But until that time, have a good one. Study hard and take it easy.